Crude oil last week traded in a narrow zone and consolidated its position before closing the week at $85 levels. We have discussed in our previous update as well why 84, 83.8 is going to be a very good support. Crude oil, in fact, going closer towards 84.2 has bounced back, and on the upside, it has failed to break beyond 87.2. Now, what to expect in the coming week from crude oil? Can we consider this as the beginning of reversal after four green candles, or it is again going to stay in range and give a breakout on the. What is going to be our strategy in order to profit trading crude oil in the coming week? We will see with the help of charts and indicators. Remember, I have been mentioning since a long time that crude oil is consolidated, it has formed a double bottom, and it is going to rise beautifully from $70 levels. It has achieved the journey till 87. And again, I am saying crude oil is going to be the biggest deterrent against the fight of central bank against the inflation. Yes, this is going to be a major cause, as we have also seen in the recent inflation data coming in from US. The energy prices were the most, which has impacted the rise in the inflation, and thus it may continue to do. You can watch my weekly review, monthly review, and the annual review which I have posted for crude oil, and definitely you'll get much insight. So in this update, first we'll look into charts followed with indicators. Towards the end, I will give you the trading strategy and level. Watch to the end, and do like, share, subscribe, and comment, friends. Press the bell icon to get the notification. Join the free Telegram channel for live market updates, and join the channel memberships here on YouTube to support the effort. Let's now look at the monthly charts here. See, this was the rise coming in from the lows we have seen during the COVID times, and since then oil has consistently was on rise. It has retraced, it has come to the support zone 67, 65, and since then we have seen it rising towards 95. Then again a retracement. You can say that this is higher lows, or you can also consider this is double bottom. So if you divide this into two, this is symmetrical formation and it is trying to rise. Now if you consider this as a symmetrical formation, you can find out that it is looking towards 92.5, 95 zone very soon. But let's focus on the current candle. If you look at the current monthly chart, see, first of all, align these three candles. You will find, even if this month oil tries to drop, now it requires a strong force for it to come to the bottom of the channel in the current month. And this is going to be important where the current candle closes, because see, if it closes somewhere here, possibility for it to move on the downside towards the next month will be high, where it can try to move towards 78, 80 as the bottom. But just focusing on the current candle, you can find out higher lows, higher highs. This is accelerated here. And if you look at the preceding candle, it is closed at the highs, and that is why we can see oil continuing on the. Now currently it is in a bullish zone, but it is finding a good resistance at 87.2. Yes, 87.2, 86 zone. Once it breaks, we are looking forward to another round of rise, which can take the prices towards 90 towards the end of this month. Yes, it is still to be treated bullish, not bearish. As of now, I do not see a major significant drop in oil. Possibility for it to continue the momentum on the upside exists, and thus as long as it stays above 82 and then $80 levels in this month, we should not be treating this as bearish. So this is on the monthly charts. Let's have a look at the week. On the weekly chart, see, it is consolidated here, red green, red green, red green. Then it has given a breakout. Now 80 was the significant resistance. It has breached past $80 levels, and since then we have seen it trading. In 3 weeks, it has almost achieved now 10% rise. Now what has happened in the last week? It has just consolidated its position. Now even if you consider higher lows and lower highs here, first of all, one must look at where are the lows of this candle and the preceding candle. It is at a distance, and the highs are very much closer. This suggests that the bullishness was more heavier, or bullishness was more compared to the bearish bias, though it is closed in red and it consolidated, but I will still not say that it is bearish. So in the coming week, first of all, we have to wait for it to break below 84, 83.8. If it does stay below this, we can look forward to 83 as the first support, and then below that, below 83, we can look forward to a drop towards 81.6, 81.5 zone. Though I do not see it breaking towards those, but yes, if you see it is staying below 84, 83.8, certainly slight bearishness will be increased there. Coming to on the daily charts, you must look at, see, first of all, the week started with the gap down opening. Since then we have seen oil consolidating, and look at the last candle. The last candle has achieved the highs, and then it has shown a stronger pullback. Yes, it has given a breakout and again fallen within the zone. Now it is very important, if the very first candle in the coming starts on a bearish note, and if you see oil is staying below 84, 83.8, consider that we are looking forward to fewer more bearish candles from the current levels. else it is still not bearish. See, rise, retracement or consolidation with a flat bottom, rise, and then consolidation around these levels with 84 at support. We can again look forward to a breakout which can take the prices higher. Now if you notice here, rise, retracement, rise, retracement, rise, retracement, rise, and it is trying to stay within the channel here. Now on the daily charts also one must look at, this is how the channel is positioned as of now. The highs are far above it, around 88 $90 levels. Now this is on the daily charts. Let's have a look at the 4 hour. Now look at the 4 hour charts. What we can see here is a sideways movement between 87 and 84. Thus it has to come out of any of these levels, and that is why I say it has to drop below 83.8 and 83 levels in order to trade further bearish, and then we can look forward to a drop here. Slight drop means it can try to achieve higher lows here coming towards 82 before bouncing back. Yes, this is one probability we should not miss. Also, if you look at the 4 hour chart, see series of bullish candle, then a sharp bearish candle, and closing at the bottom here. So if you see it is staying below 84.5 levels in the coming week, we can stay short. 84.2, 83.8 are going to be the key support levels. Now let's have a look with the help of indicators. What are the indicators are suggesting? If you look at indicators on the monthly charts, moving averages were running parallel and tried to narrow, now have started to diverge. You can see a slight slope on the upside is being observed here. Also, if you look at the median of the Bollinger Bands and the 20 period moving average are now sitting at around 80 $78 levels, which is also the bottom of the, and thus as long as in the near term, that is for next 2 to 3 months, as long as 78-80 zone is respected, we should not be treating oil as bearish. Yes, we should not be treating oil as bearish. Again, reconfirming it. Stochastic, if you look at, rising from the bottom, trying to enter into overbought zone, and it may continue to stay bullish. Now this is interesting. Look at MACD. I have been sharing this since long. First wave, second wave, it is trying to converge. This also suggests that oil is going to turn bullish soon, and thus the crossover and the current candle closing is going to remain important. If it stays above 88 and $90 levels, we can say now oil will try to reverse and stay bullish for next few months as well. RSI is rising, again a bullish sign here. Coming to weekly, on the weekly charts, you can see now the 20, 50, 100 period moving averages are crossing over here at 79 levels. This also makes this complete zone between 78 and 80 as a very strong support, and then the median of the Bollinger Bands. So that is why I say for the near term we have to be watchful. It is not to be treated bearish as long as 78-80 zone is respected. And if you look at, yes, these are coming upwards, suggestive of bullishness for the near term in crude oil. Stochastic back to overbought zone. MACD, if you look at, see MACD, it has formed triple bottom, seen this rise here, divergent and bullish. Then there was a retracement. Now this is the main trend, this is the retracement, and now it is looking upwards. Now looking upwards suggests that it can continue to stay with divergence, it can continue to stay bullish from here. Be watchful. Any rise above 87.2 and then 87.6 zone should be considered as a very bullish indication towards 89 and 90. Yes, it can in fact break 90 as well. Coming to daily, now look at daily charts. Where is the 20 period moving average sitting at, and where are the median of the Bollinger Bands? You can clearly see situated between 83.8 to 83.5. Now what price is trying to do? It is trying to consolidate here in this zone. It is waiting for the moving average to climb up. It can take the support and then fly off. This is one possibility you should not forget, and that is why I say only and only if it stays below first 84 83.8 zone and next 83 levels, you can say now price is breaking and we can look forward to 82 and 81.5 levels. The stochastic has dropped here. Now why this could drop a little? Look at the MACD on the daily charts. After forming this double bottom, see it has been trading with these swings here and trying to continuously ascend on the upside. Now if you look at the movement here, see it has just crossed over and it is starting to diverge. Now this divergence is a sign of bearishness. This suggests that there could be slight retracement, if not more slight retracement can be seen before it looks over to an up move. RSI has dropped here on the daily charts. Coming to the 4-hour chart, now on the 4-hour charts we have seen prices converging towards 20-50 period moving average. We have to wait for a breakout. If it drops below 84.5 levels, you can stay short for 84, 83.5. and then below that you can say now price is breaking, else it is still in the consolidation zone. Moving averages which are running with divergence have started to converge, though right now I can see them trading flat. It has to cross over in order to suggest slight bearishness. Stochastic has dropped vertically, but look at MACD. If you look at MACD, see MACD is forming nice waves here. You can see this first wave, double bottom, second wave, double top, and then again it is coming to double bottom level. So again, as I said, on the 4-hour charts, be watchful as long as 84, 83.8 levels are respected. It can bounce back again and continue to give a third wave. Stochastic has dropped here, RSI has dropped here as well. So now we have seen the charts, we have seen the indicators. Time for me to give you the trading levels and strategies so that you can all trade profitably and comfortably. Yes, I know the daily analysis and uploads which I share, first with the Asia session and next with the US session, these two definitely keeps you updated, but a weekly review gives you a holistic picture, and these levels are definitely going to play a major role in the move next week. And before I give you these levels, if you want to learn this art of trading, you can be part of my 30th mentorship batch starting on 15th of April, that is coming Monday. In this batch, we focus on sharing all the key concepts, tools, techniques, and strategies with the help of which you can profitably and identify profitable trades and trends with ease so that you can trade with confidence. Else, you can be part of my Signals channel or Telegram. So, whichever suits you, yes, do not miss to join the services. You can write an email or you can ping me on Telegram for any of your queries. And those who had asked me to recommend a broker, with global presence, which offers a swap-free account with the lowest spreads where the transactions and withdrawals are easier. You can find the recommended broker link in the channel and video description. So why to waste your hard-earned money on spreads? Join the broker with the lowest spreads here. Now, let's talk about the levels to buy. In the coming week, I will recommend, see, these levels will hold good for the very first day as well. 85.2, 85.6, 86, 86.3, 86.5. Now, till here, very narrow zone, very nearby resistances, and very stronger resistances. Now, why these matter? Because we have seen oil trading in a narrow zone, and these levels in the coming week are going to prove out to be a resistance for it to give a breakout. Beyond that, 87.1 and then 87.6. If these levels are taken, that is 87.6 is taken, we can say now oil is heading towards 88.8, 89.5, and then $90 levels, and this is going to happen in a quick succession. Yes, once it stays above 87.6, 88 levels, we are looking forward to a very strong rise, and that will take the prices towards 89 and $90 levels. So this is the first part of it. Now, where to sell? I will only recommend a sell here at 84.8 levels, but then 84.5, 84.3, this is the first support levels. Then if it breaks below this, 83.8 levels. This is going to be the major one, 83.8, 83.4, then 83. See, on the downside, the supports are also very, very strong. Below 83 is where I will be looking forward to 81.8, 81.1, and then $80 levels. Chances for oil breaking on the downside towards 80 is less as far as I am concerned. Possibility for it to drop towards 82, 83 exists, but then a bounce back also cannot be denied from those levels. So take your positions accordingly. Like, share, subscribe, and comment. Join my mentorship batch. Join my Signals channel. Do watch the daily updates. Thus, subscribe to the free Telegram channel or subscribe to the channel and press the bell icon here on YouTube. Thank you very much. Have a great profitable trading week ahead and a happy weekend.